Hello everyone. Thank you for joining us at this Your Overseas Home webinar. My name is Ryan and I'm a marketing manager here at Your Overseas Home. Today we'll be chatting with Ricardo Jesus from Chase Buchanan about your financial considerations you should think about when moving to Portugal. It's great to have so many of you here with us today, whether you're watching live or demand. So Ricardo will go through his presentation and cover what Chase Buchanan does and how they'll support your move to Portugal. Once Ricardo has shared his presentation, we'll open the floor up to questions. So if you have any as we go along, please type them into your questions tab on the right-hand side of your screen. We hope to answer as many queries as we can today, but if we don't get round to them all, please don't worry. Any unanswered questions will be forwarded to Ricardo and his team at Chase Buchanan. So enough from me. So we get straight into it, and I'll hand you over to Ricardo.
Thank you, Ryan. Welcome, everybody. As Ryan said, my name is Ricardo. I'm Portuguese, and I work for Chase Buchanan as a private wealth manager. And today I'll be discussing the financial and tax tips, essential bits that you need to consider before making a move to Portugal. Okay, so here's our agenda that I have for today. I'll be just introducing our company, kind of what we do quickly in the beginning. And then the main points we're going to touch is, what is the process before you leave the UK? As you are in the process of, between the UK and Portugal, and then when you get to Portugal, the main things you need to be aware. Of course, we're just touching the surface at this stage, and we're available later on to discuss questions at the end of the presentation, and then later on, we offer complimentary meetings to help you on a case-by-case basis. Okay, so starting with our company, Chase Buchanan, here's just an overview of our structure. To be clear, you see in the middle, historically, we are a UK company. We were created over 20 years ago, regulated by the FCA, as you can see in the middle. However, post-Brexit, and as a lot of our clients were living in Europe, our FCA regulation or license doesn't cover those clients living in Europe. Therefore, we needed to expand into Europe, and we got the proper licenses to help our clients there. So we're licensed through the SISEC and the ICCS to offer our different solutions. MiFID is with investments, IDDs for insurance-based products, so we cover all the bases, okay? On the right side, the far right, is we also have a US department to assist clients moving from the US to Europe. And as we have a lot of clients that move from different countries inside of Europe and the tax laws are different, we have a team of tax consultants that help and specialize into those specific situations. Okay, so this kind of covers what our structure as a company. Here's just, because here's the locations where we are based, as most of our clients are in Portugal, Spain, Belgium, Canada, Cyprus, Malta, and still in the UK. Okay. In terms of our services, we offer what the normal IFA you could find in UK. We help our clients manage their wealth with financial and tax planning basis. Essentially, not only just manage the wealth, but consider the country you are and the financial and tax implications you also have in the different countries. One thing we're really proud of is, as you can see on the far right, is a partnership that we have with the Metro Police in the UK. We actually help them create this little booklet to help people prevent or manage, just be aware of investment scams that are happening more and more these days. Here, this chart or circle helps explaining the type of financial planning that we follow. Okay, so step one kind of go together, which we look to understand the current client's situation at the current client situation and establish what their objectives long-term and short-term are. Okay, based on those two things, what the client really needs are. So we then we analyze their financial situation and we put a plan together with several recommendations. After that, we implement that plan, and we not only just implement that plan, but we need to monitor and review that plan constantly to make sure that the objectives that we establish on step 2 we can actually help the client manage and achieve those objectives long term. Okay, so it's a 6-step process that we follow all the time. We are in Portugal. We have six advisors with different backgrounds and different experience across all of us. So we can manage every single type of question, and we have partnerships with several entities in Portugal as lawyers, accountants, real estate agents that we can pass you on to if you have questions that we do not know how to answer. So let's move into the actual essential things you need to be aware. So let's start with before leaving the UK. One of the main steps is, if you're moving for a long period, is putting your UK property on the market or rent out if you find that it's a good opportunity. Okay, and you should do this before you make the move. As you're deciding to move to Portugal, these are the 4 types of visa that are most common, and you probably heard of these already. The golden visa is one that is not sure if it's going to end soon, but there's conversations that it may end soon. If you're buying a property above a certain level, usually $500,000, you can get a golden visa to enter the country. But you also have the D7. The D7 is if you have passive income that matches the minimum salary in Portugal, you're able to stay in the country. So those are really the 2 easier ones and the most searched types of visas. You also have the D2 and the D8. The D8 is more for digital nomads if you're working remotely, similar to the D7, but it's a higher minimum income you need to show. Okay, and the D2 if you're an entrepreneur, if you're starting a business, more on those bases. Okay, the process starts from the UK. You need to apply with the Portuguese embassy in the UK. Okay, usually it takes 2-3 months to get a meeting with them. And after you go on a meeting and you get it accepted, you have 120 days initial entry to go into Portugal, and then you receive your residency card. You may take a little bit longer with Portugal to get your residency card, but you should get like a permit to be able to stay in the country. Approximately, this process takes around 6 months to complete. Considering the things from Portugal, you should expect a bit longer. If it helps, you should get a removal quote. We partner with Algarve Removals to help you move from one country to the other. And if you're exchanging money from one currency to the other, smart currency, really helpful as well. Okay, so looking at just the kind of the middle process, one thing is Brexit changed a lot of things, especially when it came to the residencies. When it came to residency and the time that you are able to spend in Portugal, as it no longer belongs to Europe, it belongs to the Schengen area, so you can stay 90 days out of every 180 without needing a visa. Okay, but if you want to stay more than that, you need one of those visas that we mentioned before, which is different than before. You had the free travel. Now you're restricted to these rules. One of the main things you need to do right away when you're in the process of when you're hired here in Portugal is get a NIF, which is a fiscal number, and the Portuguese bank account. Here you see the get the passwords, because this password, as you are now a non-EU resident, you're coming from the UK, you may need a fiscal representative. And then when you get a NIF, you need to list an address. That address should either is the fiscal representative's address or the address that you have in UK. Because this is important, because the passwords to be able to access the online portal will go to that address. And that is really a key process. A lot of people never are move from the UK and then they list an address there, and then the letter goes there and they never come back, and it's just a really complicated process. Okay, so take that in consideration. One good thing about Portugal is there's no wealth tax and no inheritance tax, and that's just the Portuguese side's inheritance. If it's given to direct family, there's no inheritance. Okay, if it's outside of family, there's a stamp duty at 10%. But it's different than UK inheritance tax. Even if you're living in Portugal, there is inheritance tax most likely from the UK sides. Okay, because you're classified as a domiciled as UK domiciled, and that's really difficult and a really complicated conversation, complex conversation to have, and we can speak more about that in the future. Again, one of the final tips on this stage is do a lot of research, check these webinars, do some trips, get people to help you, like estate agents, the lawyers, the accountants, financial advisors. Get a good trusting relationship with them, because I know there's a lot of bad reputation, but there's really still good people around there that can really help you and make the process simple. Every single day I see cases of people that never really took advice, and then it's really difficult to fix the issues that were done before. Focusing here on the property. So if you're buying a property in Portugal, take consideration of the taxes involved. So IMT is just the property tax, and it can go from 0 to 8%. This depends on the value of the property you're buying. So if it's, for example, a 300,000 property, you should see around the 4% property tax. You also have stamp duty, legal fees, depending if you use an estate agent as well, which can go as high as 5%. On average, taking consideration on 6% just in taxes, okay? And this usually is quite a big amount, depending on the value of the property you're buying. Okay, so when you first arrive in Portugal, during that 120-day period, make sure you meet those professionals, get a good relationship with them, understand how they can actually help you, and then look to secure your property. At the moment in Portugal, there's very little supply and very high demand, meaning the prices are kind of going through the roof. So it's really important that you make sure you get the property that you want, because there's probably tons of people waiting in line as well. A main consideration as well is NHR. I'm sure you've heard of non-habitual residency. The name is a bit tricky. It has residency in the name, but you should see it as a tax status. It just gives tax benefits if you are a first-time resident in Portugal. And you should definitely take advantage of this, okay? And I'll explain a bit in a second. As a Portuguese resident, you have the benefit of using the national health system, but you can also get private health insurance here as well, and it's way more affordable than in the UK. And again, just don't forget to apply sunscreen, because today is just a strange day with no sun, but it's usually 300 days of sun here in Portugal. Okay, so NHR, it's a tax status. If you are a first-time resident, it gives you these benefits for 10 years, and instead of paying taxes at a Portuguese normal rate, which can go very high very quickly, you get benefits on certain levels or on certain types of income. So if you receive pension income, that's 10% during 10 years. If you receive foreign source dividends or interests, that's at 0%. Okay, some countries need to check the double taxation agreements, but that's usually the case. If you're renting a property in the UK and you're receiving income from that, if you were a normal Portuguese resident, you probably have to pay the difference, because the UK would be technically usually cheaper, or the tax will be lower, and you have to pay the difference. With the NHR, nothing else here to pay. You pay at source, the property is in the UK has the taxation rights, and you pay nothing here in Portugal. If you have royalties, it's the same, 0%. If you're coming to work and you have one of the eligible professions, and there's several, there's a full list, you can either pay at marginal rates of tax or a flat fee of 20%. You would only choose to be a marginal rate of tax if it's under 20%. But if it's higher than 20, you could just apply a flat fee of 20%, which is quite nice, and you'll see why in a second. So some of the planning considerations while you're here, okay? If you're selling a property in the UK before Brexit, if you're selling your main residence, you could still benefit from reinvesting that capital gain, or your main property proceeds into a Portuguese property, and you could benefit from those exemptions. After Brexit, you have to pay the capital gains, okay? There's no, it's the main residence or second property, it's the same. It's taxed the same way. This is something that changed recently, so I just thought it was important to mention. For some reason, if you have a holiday home already in Portugal, and before there was different rules if you were a resident in Portugal or non-resident, it now changed. And now it's the same thing for everybody. 50% of the gain is taxable at your marginal rate of tax. So the problem here is that, not a problem, but just something that puts a lot more work. If you are a non-resident, you have a house in Portugal and you're selling that, you have to declare your income in Portugal so that Portugal can assess what tax rate you're paying. Could be a bit painful and a lot of work to get this done. So it's one good consideration to have. In terms of your investments, if you have an ISA, PEP, bonds in the UK, those are not compliant in Portugal, meaning that like an ISA, the tax-free benefits that you're getting in the UK, if you are a Portuguese resident, no longer applicable. Most likely on all the gains that you have from your ISA, you're going to have to pay capital gains at 28%. Okay, so before you move, study if it's the right decision. Most likely is to either sell or restructure into something that is compliant with Portugal. One of the benefits by doing that, if you're staying long term, the capital gain tax, instead of being 28%, it can reduce to 11.2, depending on certain situations, but that is a really good benefit long term. And here's the main problem after NHR, as most of the probably the highest tax you pay during NHR is probably 20%. Then it would go from 14.5 up to 48%. And that is if you have, and it could go, the marginal rates go from 0 to 80,000. So someone that earns 50,000, 60,000 a year, which is normal for a UK resident or UK national, in Portugal, they're paying probably 35 to 40% tax. And you're paying 20 before, and then after those 10 years, you're probably paying 40. So it's a really big hit. If you don't take the proper financial planning, it could be a big hit. With the proper financial planning, you can reduce this and be more efficient, okay? Also, have a UK and Portuguese will, if you have Portuguese assets, up to date at all times. With your pension, okay, just check what type of scheme you have, because the taxes could be different. Most of the UK providers only are covered by the FCA. They don't have a license in Europe, so it may limit your access to a financial advisor there, okay? The different types of schemes are, if it's a private scheme or a company scheme, may be taxed differently. Okay, they may be taxed at source or maybe taxed in Portugal, so it really depends. So it's important to check that. Have a drawdown strategy during the NHR, so your pension should be used during that NHR period. Again, because the taxation is lower. Okay, if you keep your pension after, of course, with a state pension, it's not the same. It's not applicable. But if it's a private pension, look to come up with a drawdown strategy during that NHR period. The 25% tax-free allowance is only applicable as a UK resident. If you move to Portugal and you become a Portuguese resident, there's no 25% tax-free allowances anymore, okay? State pensions, only taxable in Portugal, while if you have a SIP or a private pension, those could be taxed in the UK first, okay? So some differences there. You can get the tax credit back. There's a double taxation agreement, so you don't pay it twice, but understand the differences. It's really key. And then depending on the first thing I mentioned with a type of scheme, there's a few options you could consider. There's a QROPS, which is overseas pension. There's also an international SIP. What it basically does is gives you some benefits that you may not have by your previous scheme before. Allows you for some consolidation. You can keep your financial advisor, give you some portfolio management, also manage some currency planning. You can have assets or investments in one currency and the other to do some sort of diversification. So things to consider, and with way more detail further. Okay, so in summary, You have to take the right steps when you're leaving the UK. Okay, just make sure you know what you're doing with your property. Check the type of pensions that you have. Look at your investments, the ISAs especially. Look at the type of things they need to do before you leave. Because as soon as you, and this is really key, when you get to Portugal, on your NIF, as soon as you list your Portuguese address on your NIF, that could make you an automatic Portuguese tax resident, and then you're required to declare your income here in Portugal as well. Okay. In Portugal, it is important to understand your short-term, long-term objectives, just to make sure if Portugal is a place you stay for a few years, or if you're staying for your whole life for retirement. And the planning really changes on depending on your objectives. It takes time, takes patience. It's not an easy process. So get professionals to help you do some of the work, but choose the people that you trust. So yeah, hopefully I covered a lot of information in this short period that we have. So now I'm just going to open for some questions. So Ryan.
Yeah, nice. Thank you very much for that, Ricardo. It was great. Some great insights there. So yeah, we've had some questions from the audience. So James has asked, is there any Portuguese tax liability on USA social security benefits if living in Portugal was less than 100 days per year? Sorry, there's a bit of a mouthful. I can repeat it if you want.
Yes, please. I missed. It's UK or US?
So this is on US. So is there any US Portuguese tax liability on US social security benefits if living in Portugal was less than 180 days a year?
The 180 days a year. So the 180 days is not really the key. The key is whether you are a tax resident or not. So if you are from the US and you're staying in Portugal, if you want to stay 180 days, if you want to stay more than 90 days out of every 180, you would need a visa. And then for example, if it's a D7, there is a requirement that you register as a tax resident. And then if you are considered a tax resident in Portugal to benefit from the NHR, then yes, you have to pay tax, or not pay, but declare here in Portugal. With US, it's a bit different. So on Social Security, you would pay in Portugal, and you also have to declare in US. You never pay twice. You just depends on a rate. During NHR, you pay the 10%. If it's higher in US, you pay the difference in US. If it's lower, you don't pay anything else. And then after NHR, same method. You just got to see exactly to what country do you owe what amount.
Okay, nice. That makes complete sense. If it didn't cover your answer, obviously we can put you in touch with Ricardo after, and we can go over more questions there. So we've also had a question from Philip. So this one seems quite complex as well, but so he's asking if he basically stays 180 days within one tax year, and then would be in Portugal the next year. For a similar amount of days, and he's asking, this is 2 separate tax years but both under 183 days in a calendar year. Does this mean that no tax returns are needed?
If you're just staying the required amount under the Schengen rules, less than 90 days out of every 180, you are just here on holiday. You don't have to declare anything. It's only if you breach the Schengen rules. And if you're actually coming with a visa or you're looking to live here, then yes. But if you're just if you stay under the rules of the Schengen area, which gives you 90 days out of every 180, no problem. It's just basically like you're here on holiday.
Nice.
Just be careful. One thing is just be careful if you're getting a NIF, and even if you're staying 3 days, but on your NIF address you put a Portuguese address, then that would probably make you as a Portuguese tax resident. That's a really important consideration.
Okay, yeah, that makes a lot of sense. So next question just come in. So James has just asked, I've read that EU is considering a wealth tax. Will that affect Portugal residents?
could as at the moment I'm not sure, to be honest. I heard about that, but I'm not sure if Portugal will be could be on that. But at the moment there's none, and there's no wealth tax like in Spain or France that you have the wealth tax, but not in Portugal at the moment.
Okay. So yeah, Dan's just been really nice. So thank you for the presentation. It was really helpful. And he's also asked, he works remotely from a US-based company. If I qualify under NHR, do I owe any tax to PT?
Depends. Yes, if you're living in Portugal and you have an HR, depends on your profession, but most likely yes, because you're living here, you're Portuguese tax resident, so it just really depends on how much income you're earning and if it's one of the eligible professions as well, like I mentioned before. So if your job is not performed from Portugal, you could get an exemption and you pay in the US and not in Portugal. But if it's assumed that the job is performed from Portugal, if you're working remotely, for example, and it's one of the eligible professions, is at a flat fee of 20%. Okay.
Okay. Yeah, that makes complete sense as well. Philip has just continued from that question about over 180 days. So he said we've already have a NIF. As we have a holiday rental property in Portugal, and our tax returns are done by a rep there. We have not been asked for a worldwide income yet. Is that correct?
Yes, unless you decide to sell. If you decide to sell your holiday home, then is where for that year you have to declare your worldwide income. So you don't have to. It's not for you to pay tax on your worldwide income. It's just that Portugal can assess what is the rate of how you or when or just what rate you're going to pay on the capital gain. So essentially, is you sell your house, you have 50% of the gain is taxable, and they need to assess what is the marginal rate you're paying. So they need to access to your whole worldwide income. It's just a calculation method.
Okay, nice. I hope that answered your question, Philip. Kate has also come in and just asked, when moving to Portugal, I understand that there is a time window for when I can bring my household possessions into the country without being taxed. Do you have any information on that?
I don't.
Okay.
I'm sorry. Not sure what she's talking about, to be honest.
Okay, no worries. You've just been checkmated there, but hopefully we can follow up.
Yeah, exactly. Please follow it up because I'm not seeing it at the moment. Okay. Don't know.
No worries. Hopefully that's not a consideration and you don't need to worry, but yeah. That's all good. So John has just asked, so EU citizens living in non-tax jurisdiction, not residents in Portugal yet, but earning income from property there, do I have to file a tax return in Portugal? Do you want me to repeat that? Does that make sense?
So just so I can understand. So he's living in Portugal with the property overseas?
Yeah, so he's an EU citizen living in a non-tax jurisdiction, not a resident in Portugal yet, but earning income from a property there. Do I have to file a tax return in Portugal? He's also said, I've obtained a NIF and a bank account in Portugal this year for the house purchase.
So if your house is in Portugal and you're living overseas, the rental income is, but you're on you may have to declare in Portugal as well because the house is in Portugal.
Yeah, that's what he's asking. Do I have to file a tax return in Portugal because he's living overseas?
Again, the rates, it just really depends on the double taxation agreement with that country. You really have to look at the double taxation agreement. Most double taxation agreements say where the house is located, that country has a taxation right. So it really depends on what the agreement says. Because UK, Portugal say one thing, France, US is a different thing. So it just really depends on what country and what is the double taxation agreement on rental income.
Okay. Yeah, that makes
That's
sense.
the main consideration. Is every country, they follow some sort of standard rules, but each country has their own set of, or each partnerships, let's say, has its own set of rules. It really just depends. That you have to look at it and study and say, depending on where your income comes, where you're resident, you then file in both sides and you pay on whoever has the taxation rights.
Okay. Yep. So Robert has just asked a question as well. If you are an EU citizen and want to spend 9 months a year in Portugal for the next 10 years, do I need a visa to stay?
No, this is only the visas are just if you are moving from a non-EU country. In the EU, there's the freedom of movement, so we don't technically need that visa.
Yeah, only British people have missed out on that. So
yeah, only if you are coming from the UK now, coming from the US, outside in Australia, that's where you need a visa. Otherwise, just freedom of movement, so you can come as anytime as you want.
Nice. Okay, so we've had half an hour, but we've got a few more questions to answer, so we'll try and whiz through them so we don't keep everyone waiting. But John's also asked, so when I move to Portugal, do I pay PT tax on rental income from property outside Portugal during the 10-year NHR period?
No. If it's a property, again, it really depends on where the property is located, what country. If it's UK, like I was mentioning before, that rental income is paid in the UK and nothing further in Portugal during the NHR. That's the benefit of NHR. After the NHR, most likely the rate in Portugal is going to be higher than the UK. So the property is located in the UK. You pay, let's say, 20% in the UK, and you have 28 liability here. You pay the 8% difference here in Portugal. That's after the NHR, of course.
Yeah, that makes sense as well. So Darren, I'm pretty sure you've covered this, but just to put make it a bit more clearer for Darren, he's asked, if you sell your property in Portugal and return funds to UK, what are the tax implications?
If you're UK resident, I think I got it. If you're a UK resident and you have a holiday home in Portugal, and if you sell that holiday home, 50% of the gain is taxable at the marginal rates of tax. It could go from 14% to 48%. You have to declare how much you've earned worldwide, so Portugal can assess what the rate is. You pay that in Portugal, and you can bring the funds into the UK, no problem. You just pay what tax you own in Portugal, and the remaining come to Portugal to your bank account.
Okay, nice. So that was a nice summary of that as well. So we've got time for one last question. Actually, it's just a question about, so Guy's asking just for some quick information. He's asking if you are the person that would also, so he's asked, is Jesus the person that would also know about Spain and Cyprus?
Yeah, I mean, you can reach out to me. I have colleagues in Spain and I have colleagues in Cyprus. If we can have the first initial meeting, I just see what questions you have. I have a good understanding of how the rules work in different countries. But again, if you are living in those countries, Spain or Cyprus, I'll pass you on to one of my colleagues that have way more experience in that area. And they're actually there if you're actually moving to those locations. So the main thing before we finish is, again, any sort of questions I was not able to answer today. Again, we offer complimentary meetings. My contacts are over there. Just send me an email, send me a WhatsApp message. I'll send you my calendar link, schedule a complimentary meeting. We go through your questions and we see how we can help you with the process of moving. And we usually, for our clients, are the touch or the first person they reach out to if they need access to other partners that we have, like accountants, lawyers, people like that. So just feel free.
Perfect. Yeah, that's a nice way to end the presentation. So yeah, thanks for, so that's all that we have time for today in today's session. So thank you to Ricardo for sharing your knowledge with us today. And thank you to all of our listeners for joining us today. There's been some great conversations and great questions. So yeah, we appreciate the support. We strongly recommend you get in touch with Chase Buchanan directly to discuss your requirements in detail, as Ricardo just mentioned. We'll be in touch with their details shortly. But But before we finish, we've had some really nice comments today in the section about the presentation being great. So if you'd like to leave us a review on Trustpilot, if you found this webinar helpful, that'd be really useful to us and obviously Ricardo. So thank you very much again, and happy property hunting. So I'll let you go, Ricardo, and see you later, guys.
Yeah, thank you so much. Appreciate it. Bye, guys.